Welcome to this week's live strategy session. Thanks for joining me. Great to have you with me again. A little bit of a change in the format this week. I'm only going to be doing one video. So that means I'm going to do the S&P 500 to the US markets. I'm going to do that first. I'm going to do it all in this one video. Reason for that is my youngest is finishing his last day of primary school today. So I'm off to an end of year assembly after this. That's why the earlier time slot, why there's only one video. But a lot to cover. So we've got the US markets, we've got the ASX 200, lots of really interesting things going on there. We want to have a look at those small caps because that's some fascinating price action happening there. So that's something we've been across in recent weeks and want to have a look at today. Also, of course, we're going to have a look at those commodities, see what the gold price has been doing, as well as looking at copper, oil, got uranium in there. And I've got a couple of stocks for you, a couple of stocks which are breaking out now, which are really, I think, interesting to have a look at. So, as always, this is general commentary only. Doesn't take your personal situation into account. And that said, let's I think we'll get into the charts. So here we go. Let's kick off with that S&P 500 this week, and it's well, look, needless to say, it's been a positive week for the stock market. I think this has really been the that point of realization for a lot of people that the path of least resistance is actually to the upside. I think that the strength of the rally we've had off this October low, I think that's really caught a lot of people wrong-footed. And the false break we had in mid-October certainly added to that negativity that built all the way through the correction from the July high. A lot of negativity in the markets. The false break intensified it. It even caused me to pull back some of my positioning. I remained long, but I did reduce risk when we had that breakout, because that's what we need to do when we're going to act in these markets. We need to be able to manage risk and be flexible with our opinions that the market may not do what we think that it could do. And but what we've had since there, it's really been a case. I think the strength of this rally, it really shows I think there was so much short covering that went on in the initial few days. Then you got the people hoping for a pullback to get long. Market really didn't give that opportunity. It kept going higher. So then there's really a scramble I think for some people, even to get into positions, people who are adamant the market had to fall. You've got that scramble to get into a position. And I think the play from here, I think, is to continue taking this market from the long side. That's been the case for most of the last year, and there's nothing on this chart at the moment which would suggest otherwise. I think, though, rather than chasing the S&P 500 at current levels, my preference, and this is something I said last week as well, my preference is to look for stocks that are breaking out of ranges or rallying off their moving averages. And I think when you look at the S&P 500 on the index level itself, there's no doubt it is stretched above these moving averages. I've got the 50 and the 100-day moving averages, and then we look at where the all-time high is, and the all-time high is only 2% above current levels. So from that perspective, it doesn't to me seem like an asymmetric entry point to be coming in and buying the index. But I think for those who are already positioned, and if you've been following this broad momentum really we've had for the last year, for those already positioned, I think it's a case of continuing to stay with that momentum and see where this momentum goes. And that's the thing. We don't want to try and preempt the top of the market. It's when the trend's up and momentum is moving in the upward direction, it's a case of see where it goes. Now, one of the areas of market I want to look at, it's in the small cap space. So I've got the Russell 2000 on the screen, and this has been a significant positive over the last week. It really has seen a rapid improvement in the and generally that small to mid cap space overall. And last week I was saying, like last week, we'd seen the market flip to above the moving averages. Moving averages had been turning higher. We were above some resistance at around 1,800. And I was saying that I thought there was scope for the index to push towards 2,000. When I said that, I wasn't expecting it to happen in 2 days. I thought this was something which could unfold over the next several weeks, maybe the next couple of months. But it's happened in 2 days. It really has been quite extraordinary. And this small cap space, it really is a part of the market which has been, look, I think you'd say that it's been out of sync with the larger stocks generally for much of the year. And so what we've seen with this big catch-up rally in the small to mid caps, and when you look at the S&P 500 on an equal weighted basis as well, I think it really is a positive development. We've got the Russell now testing this overhead resistance at around 2000, just above 2000, 2010, 2020, tasting these three previous peaks over the last year. And for me, I think the odds favour that we do get some sort of pause, we do get some sort of pullback to consolidate. This has been a big rally, testing resistance, stretched above the moving averages. Often when you get that flip from the below the averages to above, there is at some point, you get the pause, you get the consolidation. Sometimes you get the retest of the averages, but it just lets those averages start to catch up. And that can then lead to, well, I think in this case, we're looking for, can we get above this overhead resistance around 2010? I think so, but I think my feel is some sort of pause potentially before an attempt to break higher. But as I said earlier, trends up. It's not a case of trying to pinpoint these things because none of us know. It's a case of go with that momentum, follow the breakouts where you see them. And this is another reason I think to stay long stocks. Just quickly, just have a look at the US 10-year bond yield. It's really started to pull back in the last couple of days. News out of the Fed, it's causing these rates to come lower. We can see these moving averages continue to roll over, they're coming close to crossing on the downside. So we've seen yields go from 5% to now under 4% in the last say month and a half, and this is really this decline is starting to accelerate, and this is now a tailwind for stocks. And that's a complete change from the relentless rise in yields we had from around May last year, May last year. We had that relentless rise, and that really did put pressure on the market. It was behind a lot of that negativity that we saw. And it goes to show, I think it goes to show the importance of being aware of key levels. So just quickly jumping back on a weekly chart of this, and you can see this blue band. Spoken about it many times, 5%. You can see it's been a technically active area for years and years and years, for decades. And after such a big run, it seemed like a logical place to get a pause, something we spoke about. And then also looking at things like divergence, like we spoke about previously. Like none of these things mean you'll get every turn right. There'll be plenty of times where these things really don't give you, they don't follow through to what they suggest could happen. But I think that just by being aware of these technical features on charts, it can help guide our thinking and make us aware of possibilities that many aren't considering. And I can tell you, many people were not considering the S&P 500 would be closing in on an all-time high at this point in time. Now, let's go over, let's look at the Aussie market. Go have a look at the ASX 200. And if you're one of my US viewers and you're leaving now, please click that like button before you head off. It really helps when you do that. And leave a short comment. Let me know whether what I do helps. Now, let's have a look at this ASX 200 because this has been a really big week. Last week we had the ASX 200. It was just starting to get above this overhead resistance around 7,100. That was the bottom of the big range the market had been in for 6 or so months. We're getting above there. The moving averages were turning higher. Prices were above the moving averages. So what I was saying this time last week, I said, I think the play here is to buy into the momentum. And so far that's been working. We have had this nice move higher. And that's the thing with momentum. You never know how long it will last or how strong it's going to be. But momentum, I think momentum is basically our best guide to the path of least resistance. It's go with what's working rather than try and preempt something different happening. And I believe the odds now favour that, look, the trends on, I think the odds favour that when the trend's on your side, that's the way you want to, I think you want to approach the market. And so where does this leave us now? And I think, well, a couple of weeks ago, I was talking about being open to the possibility that prices head back to 7,400, which is the top of this previous range. And that's where we are now. We're actually above there. And just like what I was saying with the Russell, I didn't expect that it was going to happen in the space of a week. I thought it was something which will go like start to grind and then maybe build up some momentum over the weeks ahead. But it's all happened very quickly. And this is one of those things that can happen when you get overly negative sentiment, that you can get these big shifts back. And that's why I was saying last week, we don't know which of these momentum moves are going to lead to the real thing, but you've got to jump on board them. You've got to follow them, because one day one of them goes, and it goes really strongly. And that's what we've had over the last week. What I'm going to do here, I'm going to remove this. I've had this overhead resistance on the chart for ages, because that's been the upper boundary of this range the market's traded in for quite a while during the year. I'm going to take that off now, because what I think the focus is, I think the focus now shifts to a cluster of resistance points. Let me just compress this. Cluster of resistance points around, we've got these previous highs from earlier in the year. Let me just move this across a little bit. So we've got these previous highs. So that's going to become a resistance point. They come in around 7,500. And then we've also got this triple top overhead resistance at the all-time high. That's around 7,650. So really, this is kind of the cluster that we need to look at now. So it had a big run up underneath a big overhead resistance area. So I think from that perspective, I think odds favour some sort of consolidation to come so fast, so quickly, stretched above moving averages. The moving averages are turning, which is really positive, and we're above the averages. We're just a long way above it quickly and right beneath heavy overhead resistance. So this would be a natural place, I think, for the market to pause and take a breath. There's probably also been, and there probably still is, a bit of FOMO, fear of missing out, going on. And those people, they drive the price higher, they get set at a higher level, then the market pulls back, and often a lot of the time they get shaken out. So I don't think this is an asymmetric entry point up here for the index. But having said that, hopefully you've already been adding to your ASX holdings and positions over the last few weeks, as we have had this upward momentum starting to build. And if that's the case, well then, hopefully you're well placed during this rally. So it's okay then to sit with the stocks you have, hold, see whether a consolidation happens. If it doesn't and the market keeps blasting high, well, hopefully then you're already positioned should that happen. I think the play is to be buying stocks that have that momentum, that are breaking upwards. Like I said earlier with the US stocks, it's like looking for ones which are breaking out of ranges, bouncing off their moving averages. I'm hesitant to chase stocks which are elevated well above their averages at the moment. I'd rather look for those other situations where the setup looks more asymmetric, where the risk can be managed a little bit differently to having to chase a stock which is really high and going, well, okay, where do I put my stop loss? So that's my preference. Look at the individual stocks whilst we're just below this resistance point after a big run up, and look for the breakouts. And also, having said that, I don't want to limit my upside by taking profits off the table too early. We've had a good run, but I'm happy to let that run continue and see where it goes. Now, if you're getting some value from this, please hit that like button and leave a comment, just a short comment. Just tell me whether these videos help, and yeah, tell me what you get out of them. And now, in a moment, I want to go through and talk about a significant development in a really key sector. And this is really big. This news is really big. What's going on here? And of course, I've also got the small caps. I want to go through, have a look at those small caps, the commodities, and these two stocks for you. So these are two stocks, which like a really good example of the stocks which I'm talking about now, where we've got market stocks which are breaking out of ranges, coming off moving averages. These are the areas which I think are worth looking at. And but before I get to that of course wraps up the free section for today. So if you're not a strategy session member, think about coming across, clicking that link below, signing up. Doesn't cost you much. It's just like bringing me a cup of coffee to the rest of the session, and that just yeah, look, it just bring me a cup of coffee for the time I put into putting the rest of all this together for you. Now, look, having said that, let's get into the rest of the session. So let's go over, have a look at those small cap